So you have 200 countries represented at this summit, the United Nations Summit on Climate Control, right? And it's being presided over by the chairman of the United Arab Emirates state-owned oil company. That's who's presiding over this event. And what did the UAE just say to the world the day before they invite 200 countries to their summit? We will no longer take US dollars for oil.
Wednesday, December 6, 2023, Monaco 64, home of alternative economics and contrarian views. Today, I have Andy Schectman back on the channel. He's a co-founder and president of Miles Franklin, one of the biggest precious metals dealer in North America. Andy, how are you?
That's good to see you, Mario. I'm good, buddy. How are you? Thanks for having me back.
I'm fine, Andy. And I was telling you before we started that I'm working a lot on my golf game. It is winter, but here in England, if you make excuses about the weather, you hardly ever play. So I've been playing a lot, and hopefully we'll be playing, soon, sometime.
Well, I understand that. I live in Florida, where I have the good fortune of playing year round, but I spent most of my life, 50 years, in Minnesota, and I had a canvas cart cover that would cover my full enclosure of the golf cart, and we would bring camping heaters and bungee cord them to the cup holder inside the cart. It would be 35, 38, 40 degrees outside Fahrenheit. Not quite sure. Sorry about that. They're cutting some tile. It won't be long. Anyways, 35, 40 degrees Fahrenheit outside and freezing cold, but you get in the cart and it's like a sauna. And if you want to play the game badly enough, well, you deal with the elements.
That's right. And I guess in precious metals, it's the same thing. We have to be psychologically tough and deal with the bullion banks. So maybe we can start talking about gold and silver.
Yeah, absolutely. Well, there's, the gold and silver market will test the resolve, that's for sure, of even the most staunch bull. But you know what? It continues to move higher, and it's the tortoise that wins the race, not the hare in the end.
Yeah, my wife always says that I'm a bit like the tortoise. I'm not like a Flash or anything, and my channel, it doesn't go viral or ballistic in terms of subscribers. And before we get to the precious metals a bit more in depth, just wanted to ask you about COP28, the late climate change conference. Was it in Dubai or the United? Well, it's part of the United Arab Emirates,
right? And to me, the only thing that I wanted to really chat with you about that is the really ironic event that took place. It's funny. Every time I sit down to do a podcast, this guy thinks he should come and cut tiles. They're fixing a bathroom in my house, and I swear it can be all day long, and I won't hear him do this. The minute I flip on the Zoom, there he is outside my window cutting tiles. It won't be long.
Can't really hear it, so.
Oh, good. Well, geez, I can. That's good. Anyways, so the Western media, Mario, is pathetic, and it's embarrassing, the lack of information, the lack of important information that we get from the Western media outlets. So let me explain. So the United Arab Emirates, a country that is the 7th largest oil producing country in the world, an OPEC country, a country that was just admitted to the BRICS alongside Saudi Arabia, is the context for which I would like to just discuss this briefly. I've talked a lot, over the last 3 years about my vision, if you will, of ultimate de-dollarization and its effects on the petrodollar, on the potential loss of the singular sole settlement status of the dollar for oil. And I have highlighted that by the fact that all of the OPEC countries are on the Belt Road Initiative, including the UAE. All of the movements that we've seen Saudi Arabia make over the last couple of years in terms of joining the BRICS, in terms of joining the Shanghai Cooperation Organization, in terms of joining the BRICS New Development Bank, and making the provocative statement at Davos earlier this winter, last year, well, in January, I think it was, or February of this year, saying to the world, hey, we would be open to taking other currencies for oil. And that was a big statement, but not like what we just saw. And that's what's so crazy. What we just saw a couple of days ago isn't being reported in the mainstream media unless you dig. And this is what is so crazy to me. So you have 200 countries represented at this summit, the United Nations Summit on Climate Control, right? And it's being presided over by the head, the chairman of the United Arab Emirates state-owned oil company. That's who's presiding over this event. And what did the UAE just say to the world the day before they invite 200 countries to their summit? We will no longer take US dollars for oil. Now, I don't know if that's a coincidence. Sure seems a hell of a coincidence to me that the day before they invite all of these countries to talk about climate change, they make an admission to the world that we're not going to take dollars for oil anymore. And as the seventh largest producer of oil in the world, and an OPEC country, and a country that just admitted to the BRICS alongside of Saudi Arabia, to me, this is a very, very, very big deal. Now, you had the former president of Ireland speaking at this event, and it was some deal that was mixing gender equality with climate control, and it was called something to the extent of I don't know, females for climate control, something along those lines. And you know, because obviously gender equality and climate control go hand in hand. But anyways, I'm just being facetious. But as she was talking about her belief on green energy and climate control, the gentleman who is presiding over this conference, the head of the state-owned oil company, said, if we do this, you're going to send the civilization back to, you know, to the caves, more or less. I'm paraphrasing what he said. He kind of rained on her parade. So look, the bottom line is simply this. The United Arab Emirates and all of the OPEC countries and all of the countries in the Belt Road and all of the countries in the BRICS, they're not going green. And the fact that we signed an executive order to go green started this ball really rolling down the hill faster and faster and faster. But I think it's very, very important for people to understand the significance of this. Now, could that be why gold took off? Maybe. I mean, 200 countries were just told we're not taking the dollar for oil anymore by a massive oil player, one that is now in BRICS. Could that be the reason? Well, certainly you haven't heard anyone talking about that, but to me, it's very coincidental. And I would just like to lay that out there and say, hey, you know, the things that I've been talking about are coming true, and it shocks me to see the speed at which it's coming true and also the lack of coverage. Now, wouldn't you think that by the United Arab Emirates saying we're not going to take dollars for oil anymore, that would be something that the mainstream press would jump all over? Not a word. Crickets, not a word. So little by little by little, we call it logarithmic decay. Little by little by little by little, chopping away at the dollar hegemony. This is one big axe swing at the tree. And I think there's more of this to follow. Not as dramatic as Saudi Arabia and the rest of OPEC making this announcement. But, you know, nonetheless, I think it's something that should be mentioned and certainly thought about.
Yeah, I saw that story, and I just shared the story. It came from a crypto website, and yeah, I haven't seen it anywhere in the mainstream media.
There is a little bit of murkiness in it here, but nonetheless, I do think it underscores a growing trend of de-dollarization, and quite frankly, I just think that there is a drive to move away from the dollar. Look, the United Arab Emirates did this massive deal with our supposed ally Macron in France for liquid natural gas last year. earlier this year, and he paid for it in yuan. Deals are being struck outside the dollar all around the world, and it's the lack or the reduction in settlement for the dollar that is going to over time affect the settlement value of the US dollar, which over time will erode the reserve status of the US dollar. And the less demand for US dollar, all of these deals were always settling in dollars, and now they're not, or certainly much less. It's a growing trend. It's something to be keenly aware of and keep your eye on. To me, it's the biggest thing that I focus on, but you know, it's not that pivotal moment yet, but I think you can see a growing trend moving in that direction. And that's the difference between this group and the West, who tends to do things minute by minute, shotgun style, where what is being done over here in terms of accumulation, in terms of commodities, in terms of accumulation in the size and the scope of the countries that are joining, is very methodical. This is being done methodical and being done the right way. They are growing in significance, in scope, and in every single way. Whether you're talking GDP, whether you're talking military might, two of the three largest nuclear arsenals, whether you're talking the energy and commodities and transportation routes, and it's growing and it's gaining credibility very quickly. This is not something to be taken lightly, and there's over 40 countries that have either formally applied or expressed interest in joining. So this is a trend that is gaining, if anything, momentum. So doing something like this, these countries, this is a big, bold move that these countries would have certainly been reluctant and wouldn't even have the ability to do in years past, but are now finding safety in numbers. And I think that's the important thing to take away, is that safety in numbers is giving them the courage to break away from the Western hegemony. And I think this is just the beginning.
Yeah, I agree with you. I think the mainstream media, mainstream analysts, economists, they don't see this at all. Maybe because they downplay, they're too arrogant to think that the West will always be in charge. But I've been covering the petrodollar and the waning of the petrodollar for like 6-7 years, because China and Russia, they've been setting the infrastructure up over the long term. This is not something overnight. And I agree with you. There is more and more countries interested in the BRICS. I think there's a BRICS summit, and there are 155 countries represented. I mean, there's a lot of people who are interested in BRICS, and even Brazil. I noticed they're going to join OPEC, which is surprised. And I bet the OPEC countries are moving away from the dollar. I mean, they're the same ones. Saudi Arabia is in there, and Russia. Not China, but China is probably the biggest customer for OPEC and OPEC plus. So,
well, what did the Crown Prince from Saudi Arabia say not too long ago? I'm paraphrasing again, but it was something to the extent that not only was China their biggest customer this year, but for the next 50 years moving forward, they envision it. Well, who has been, and they use that number 50 for a reason. I mean, who's been their biggest ally for the last 50 years? Well, things are moving in a different direction. And these statements, whether they seem mundane or inconsequential, each chop of the tree, little by little by little by little. And when you have Saudi Arabia saying that China is our biggest trading partner for energy moving forward for the next 50 years, I mean, does that mean something? Well, absolutely it does. And I think this is one of these deals where it's more and more and more of the same, but growing in significance. And to see Brazil, who struck a deal with China, a unilateral deal for all of their trade to be done in real and in yuan, these are big deals. So to see them join OPEC is another chop away, little by little, the logarithmic decay, which says little by little by little, then all at once. It's like going over the waterfall. But where are we in this graph. Where are we in this chart of logarithmic decay? That's debatable. I don't know. Are we close to going over, or are we still way upstream? I'll let you, the listener, and you, Mario, decide. I'm not quite sure, but I do think that if nothing else, the pitch is starting to fall, and so you're starting to see a greater speed at which these things are developing.
Yes, and all these countries that are moving away from the dollar, Andy, they're accumulating a lot of gold, even silver. I saw India's buying a lot of silver. So with that, maybe you could tell the viewers about the specials you have this week for gold and silver at Miles Franklin.
And I've added a fourth one that I'll mention as we get through these. So, look, for the real quick, we'll go down, Mario, as one of the greatest mysteries of my career is what's happening right now. And that is that, there are shortages in industrial sized bars on the COMEX and large deliveries coming off the LBMA and the COMEX, even the Shanghai Metals Exchange. Ted Butler keeps talking about how short everything is in terms of supply and how tight it is, and the massive acquisition, like you say, India imported 60 million ounces in October, and 304 million ounces last year of silver. And so as the tightness is up above, the availability in the retail and wholesale market and the premiums is as good as it's been in over 4 years. It's a mystery to me, because to me the world is scarier than it's ever been. So this is a good time, and it's almost like I don't know. It doesn't make sense to me, and it's hard for me to wrap my head around. But see these 100-ounce bars at $1.45 over. That's not much more than they would have been priced at any time during my career. We also have the junk silver bags, $3 over spot. I was buying those back from the public, dimes, quarters, and half dollars, minted prior to 1965. I was buying those back at $9 and $10 over spot from the public earlier this year. And then we have the $20 gold piece, the AU grade, which one of my favorite. I mean, if I had my druthers in terms of gold, I would only buy the $20 Liberties and St. Gaudens and the $10 Liberties. The pre-33 gold, like I have way back there, I sit at my desk, but the computer blew up here the other day, so don't have as good of a view as the pictures that have those coins in them behind me. But that's a true piece of Americana. Oftentimes you and I talk about the British sovereign, which is just over a quarter ounce. These are almost exactly 1 ounce, and they were minted from 1850 to 1907. And when it says AU, that means it's almost uncirculated. So, that could have been in great-great-grandfather's pocket 100 plus years ago. And I think they're neat. I think they're a piece of Americana. I think they're a wonderful way to accumulate gold. And if I had my druthers, it would probably be all that I would own. It would be the Liberties and the St. Gaudens. But I'm adding a fourth you don't have an image for, and I'm doing that for 1 week, and that is Silver Eagles in any quantity for $4.99 over the price of silver, which will be as good of a price as you'll find in almost any company in America. And with all of these states in the United States passing legal tender laws, Texas and Idaho and Wyoming and Alaska and Missouri and Kansas and Oklahoma, Arkansas, North Carolina, all of these states are passing legislation, or already have, saying that gold and silver coins minted by a sovereign government, whether it be the United Kingdom or the United States or Australia, it doesn't matter. If they're legal tender coins, past or present, issued by a foreign government or the U.S. Mint, that it would be legal tender for all debts, public and private, including paying your property tax. This is something I thought I'd never see.
I know.
So I think there's a lot to be said for owning the coins right now. And Silver Eagles at this rate, to me, they've been too expensive for 4 years, and I'm just trying to, into the end of the year here, offer them as inexpensively as I can, keep as they've been since 2019.
It's interesting you said that some of the states, they'll accept coins as long as they're coins of whatever realm as legal tender, because I think in the US prior to the Civil War, loads of foreign coins circulated freely. And why not? Because if it's gold or silver, it doesn't really matter what country it's from.
Well, the same thing is true in Europe. I think it was it was from the Dutch guilder, I believe, was the coin that most people would use around the world because it, they around Europe anyway, they knew that it was real and it was liquid. And yeah, you're right. I mean, if it's a good quality coin and from a reliable sovereign mint, one that is where there's no question of its authenticity or of its value, why not?
Yeah.
So that was surprising to me as well. You're right
Yeah.
that these mints said, or these governments, these states are saying, yeah, any sovereign mint coin, past or present.
Yeah, it's interesting because I have a 1904 $20 gold piece, double eagle. So that I'm
Well, there
familiar.
are a lot of them in Europe because all debts prior to World War II were settled or prior World War I rather, were settled in gold and silver.
Yeah, yeah, that's right. So, you were talking about UAE. They announced that they were only not going to deal in dollars anymore, and that will, affect the financial markets, of course. And recently, we've seen a story here, and I'm going to bring it up, which reminded me of 2019. I'm not sure. I'm not saying this is going to kick off, but this is from Bloomberg. They're saying repo market spikes conjure memories of September 2019 US funding turmoil. And I remember that really well. I mean, this is when my channel really started picking up a little bit, the repo crisis. Yeah, what do you think about this? You think this is just a false alarm, or it could get worse? I mean, as you can see here, the rates are spiking, but I remember in 2019 they went from 2.5 to like 10%. So it's nowhere near there, but it's something we need to keep an eye on, and it could.
Well, we've seen all that we've heard about for the last year or so is the reverse repo facility, right? And that's where individuals and institutions have their cash parked because it earns a higher rate of interest and is more or less risk free because the Fed is backing it. So you don't have the risk of default or the things that you would traditionally associate with short term lending facilities. So what's happened is that the government, the Treasury, has raised their rates so high that it's draining precipitously. And when I say raise their rates so high, you can get a 6-month Treasury at near 5.5%, which is higher than the repo market, which is about 5.33%. It's the reverse repo market. So all the money that people have excess cash that they were giving to the Fed has been drained out, going directly to the Treasury to fund their spending habits, their addiction to spending, and that's being drained. And the talk of that is that as that money gets drained, because that on one hand people are parking their money there, on the other hand the repo market is where institutions go because they need liquidity. So on the reverse repo market, you're looking for yield. You have money and you want some yield. On the repo market, you have some collateral and you need liquidity. So as the rates go up, it's basically signaling, in my opinion, that there is a need for liquidity, that a lot of these companies that would go to the repo market for liquidity, it's becoming harder and harder and harder to find because it's being sucked out and going directly to the Treasury to fund their ridiculous spending habit. And I think it's kind of an indictment of the economy here. As the rates go higher, it's going to put greater and greater and greater strain on a lot of companies who don't have the ability to access cash that they need. And we've gone from a place of having too much liquidity and trying to find a safe place to put it to a situation now where you have cash-starved companies that, in a slowing economy, that are in need of liquidity. And I think this is a trend that you'll continue to see.
Yeah, I looked at a few numbers here, Andy, because the Fed, when they started tapering back in I think it was 2015, You see it here, or actually 2018, they started tapering, and then they got down to how much was it? I've got it written down, three point uh 3.759 trillion, and they got down from a high of let's see, just over 4.5 trillion. I did the calculation. They drained the balance sheet by 16.7%. And then you see this going up here. That's when the repo crisis started. At the time, they were saying, oh, it's right here. They're saying, oh, this is not QE. We're just providing liquidity. So they did the QT here. And then the repo crisis started. They started providing liquidity, not QE. And then we had the excuse of the pandemic, of course, for them to really, really raise that massively. And I've done a little calculation of when they started QT. This time around was April 2022, and the balance sheet has fallen by about 13%. So we're not at 16.7% yet, but I would say that we're very near somewhere where it's going to cause problems, and it looks like it's causing problems in liquidity. So yeah, they might be forced to do this again. This was when the banks collapsed in March. They had to do not QE.
Right.
So yeah.
Well, so the conventional wisdom that people have been saying is that once the reverse repo is drained, that you'll see rates across the whole curve surge higher, maybe much higher, and that's because the government's appetite for borrowing is only increasing. Look, the government borrowed $500 billion in the month of October. Right? It took this country almost 200 years to do that. We do it now in 4 weeks, and this is what is going to make the interest cost alone go up, and that's going to put a lot of strain on the corporations that need liquidity, that will go to the repo market for short-term liquidity, where they will pledge treasuries to get liquidity. Well, rates are going higher. I believe I've been saying that consistently, and I think that if the government, everyone has said that the government will, or the Fed will pivot and lower rates, and you do that, you've signaled that you've given up on inflation. And at that point, it's just you end up in the same place. So this is not a good thing. It's not a good thing. And it portrays tougher times ahead as far as I'm concerned, and especially for the economy, where cash-starved companies and institutions are in trouble. They're going to have to pay much higher rates. I don't look. You will see much more difficulty in companies, corporations, institutions financing their day-to-day operations. Those that are reliant upon some help from the repo market, as these rates, I think, continue to move higher. So I guess only time will tell.
All right, Andy. There's a kind of debate going on whether the Fed is gonna not do what they usually have been doing since 1987. Greenspan has been the Greenspan put, or whether they're going to this time let everything implode. I personally think it doesn't really matter if you hold gold and silver outside the system. If either one happens, if they inflate the bubble again and when we hyperinflate, or if they pull the plug and everything collapses, I think it's good to have gold and silver. What's your view on that debate?
Yeah, well, I think that gold and silver to me are wealth, Mario. They've outlived everything the world's ever thrown at it, from 2 world wars to German hyperinflation to the Great Depression. And I think there's no coincidence that not only the most well-funded, but the most well-informed traders on the planet, central banks, are loading up on it. And look, to assume that the Federal Reserve will come to the rescue at all times, I think is a mistake. The market is bigger than the Federal Reserve. The market is more powerful than the central bank. And I think that's a lesson that most people haven't learned yet, but I think history has shown that the markets are even bigger than then the Fed. There's the old adage, don't fight the Fed, but that's when the dollar has been accepted as the world reserve currency forever. Now, what happens if the majority of the world who has had to stockpile dollars for the last 50 years starts to follow suit to the United Arab Emirates and to other countries who are de-dollarizing? What happens when a good portion of the world no longer wants to transact in dollars? Or what happens, heaven forbid, when OPEC says, hey, look, you guys, you've signed an executive order to go green, and we respect that, but we're not going to take dollars anymore, and dollars are dumped. This is an event that I've talked about for a long time, that a lot of people thought, well, that could never happen, recency bias or normalcy bias, but look what's happening. It is happening, and little by little by little, methodically backfilling, doing it the right way, growing in significance and in legitimacy. So, yeah, it may not happen tomorrow, but I think it would be a mistake to assume that dollar supremacy reigns forever. A country that is completely addicted to spending, is divided completely and totally. They call us the United States. This country is divided and divisive. This country is not what it once was. You have so much, you have lawlessness in the cities, you have an open border, which is almost as if we're being invaded. Up 8 to 10 million people from all around the world, including the Middle East, and they're finding hundreds and hundreds and thousands of Chinese military-age fighting men in the Mexican border that come there with clean clothes and nice luggage. Now, how the hell did they get there? And there's all sorts of crazy things going on that the world is looking at and saying, is this the country I recognize? I don't think so. Lady Liberty with the blindfold holding the scales of justice. Put Trump on one end and Biden on the other and tell me that Lady Liberty is seeing things equally or fairly. You have a lot of things that are happening simultaneously, whether it be the mismanagement of the dollar, whether it be telling the world we're going green, and the linchpin of the dollar hegemony being our relationship with OPEC and Saudi Arabia. And then you have what's going on in this country on top of the divisiveness and the whole country being divided, red and blue and black and white and rich and poor and vaccine and no vaccine, and all of this dichotomy. You also have the largest amount of debt ever. You have $1 trillion in credit card debt, record. You have 17 trillion in household debt, record. You have like 12, or I don't know what the number is exactly in mortgage debt, but it is record. You have record 1.6 trillion in student debt, which is also, shockingly enough, the largest asset of the U.S. government on their balance sheet. 40% of their assets they consider to be student debt. It's pathetic. At the same time, you have record U.S. debt. You have lowest level of savings. I mean, all of these things are not adding up well for the United States to be able to say, well, it always was, it will always be. No, it's as if things are changing right in front of our eyes. And I would say that's another example of something I wouldn't use recency bias to bet that Fed put will be there when we need it to be. I think the market might be a little bit bigger than the Fed when this all makes this shift. Look, we're at 130% debt to GDP, almost exactly. And to my recollection, there's never been a country in history that's crossed that line that has come back. And you cross that line, you default. History has shown us, either by outright default or by hyperinflation. So, one of these days, assuming that things will be what they always would be, could very well be the worst decision that you ever make.
Yeah, thank you, Andy. And the other thing is all the things that are happening in the U.S. Socially, politically, economically, reminds me of periods like the French Revolution, when they had the assignats and hyperinflation. Reminds me of post-World War I Germany, where the Kaiser was, he abdicated, and you had different states in Germany declaring independence. You had political assassinations. So all the symptoms seem to be there for a currency collapse, and whether it will be hyperinflationary or deflationary, I think what you said is right. Gold and silver will always preserve wealth, while
and I think it'll be a combination of the two, by the way. I think you'll see hyperstagflation a slowing economy, little or no economic growth, higher taxes, higher inflation. I think it'll be the worst of both, and unfortunately, that's kind of the way that I see it. I wish I didn't, but I do, and
Yeah.
I guess only time will tell. But yeah, to rely upon things as they always were, I think is a big mistake.
So yeah, you'd have asset prices collapsing, but everything you need for your daily survival up in price. Great, Andy. Thank you for coming on the channel again, and let's keep in touch, and hopefully we'll speak again soon.
I'd love that, and I'm sorry for the hiccups and the mad tile cutter out there. I hope you're able to not hear that too much, but I love coming on your show, Mario, and I'll always be happy to come back on, and hopefully we'll do it again real soon. Thanks for having me, buddy, and happy holidays to you and everyone else out there.
Thank you, and happy holidays to you as well.